Okay, hi guys and welcome. First of all, just make sure I've got everything set up AV-wise. Give me a thumbs up if you can hear me and you can see my slide deck where it says Module 2. Okay, good. Then we're good to go. Welcome to Module 2 of this Finance Masterclass. In this 8-module series, you're going to know more about business finance than 95% of business owners. So let's get cracking. First of all, a recap. On week one, we said that if you don't know the scoreboard, if you can't read the scoreboard, you don't know the score. And if you don't know the score, you can't tell the winners from the losers. And we said, look, we've got the profit and loss statement, the balance sheet, and the statement of cash flow are a bit like the heart, lungs, and brain of a human being. This is how we keep track of the vital signs of your business. Yeah, and we said each has 3 component parts. On the P&L, you track the sales, expenses, and profit. On the balance sheet, you track the assets, the liabilities, and the equity. And on the statement of cash flow, you track the 3 different types of cash. Simon, and you can't eat on this call, Simon, or I'm going to ask you to answer questions. The 3 types of cash: operating cash, i.e. money that comes from and goes to operations; investing cash, Sharon, which is the buying and selling of assets; and financing cash, Tracy, which is the borrowing and the repaying of debt. These 9 component parts that make up these 3 scorecards are like tracking your vital signs. What can help you at one time, what one man's medicine is another man's poison. Okay, so we need to be constantly dialed in on that. Again, after this, all the recordings of the previous modules are put up at danbradbury.com/finance, so you can go back and recap more in depth on that module should you wish to. Okay, so now we're going to talk, in today's session, I'm going to talk about the 3 critical roles that you need in your business, Steve, Alison, if your business is going to successfully grow, or at the very least, if you're going to have clarity, financial clarity. Great quote from Stephen Covey, that the strength lies in differences. So we're going to talk about the different roles and why they cannot successfully, in my opinion, be done by the same person. So there are 3 key roles necessary to scale a business. And kind of like the 3 scorecards, they are different, but all critical. Here are the roles. Okay. Oh, wow. Hey, Martin. Hey, Neelam. So here's role number 1. An accountant. You're going to need an accountant for certain specifics that we're going to go into on the next slide. Secondly, you're going to need a financial controller, but perhaps not for the reason that you think. And third, you're going to need a bookkeeper. So you need an accountant, a financial controller, and a bookkeeper. 3 different roles, but what do they mean? Okay. Oh, actually, first of all, why are they important? Nobody is great at all 3. So you're not going to have one person do all 3 roles. They're going to be 3 different people. And think of it this way. It's kind of like having a catapult rather than a train wreck. Because these roles are different, which we're about to talk about, what the ins and outs of each role, because these roles are different, if you try and get the same person to do all 3, you tend to get somebody that is mediocre at all of them, or worse, they pretend to be, they're good at one of them, but they're actually terrible at another one, and you end up in a train wreck situation. You end up with a tax investigation, or you end up running out of money. Okay? So what do these roles do? This is an oversimplification, and I know there's a couple of people on this call. Martin, feel free to object. Hello, Rachel. Feel free to object if you disagree with me, but these are tendencies, okay? The accountant, they're primarily responsible for tax returns and payroll, right? So think about it this way. They're responsible for all things tax. A tax accountant, they have specialist skills, they have qualifications, they have experience, as it relates to doing all things tax. That's your tax returns, that's your payroll, so that's your VAT, that's your corporation tax, that's your statutory accounts, that's your NI. That's their job. That, however, is very different, Christopher, from a financial controller. They are responsible for the money coming in. They control getting the money into your business. So you've raised invoices, Graham, but you want to get that money into your business. Okay, that's their job. It's to collecting the receivables, okay, the trade debtors. But they're also controlling, they're the valve that controls the money, Aaron, that leaves your business. Okay, Jim, so they're the ones that have got the tightest impact on cash flow, John. So your accountant controls your taxes, the financial controller controls your cash flow. Okay. However, by the way, this is generally speaking in descending order of pay grade. So in an equivalent hourly rate, the accountant's the most highly paid, then the financial controller, then the bookkeeper typically. However, a different thought of saying is the bookkeeper is the foundation, because the bookkeeper's job is to raise and track, to record, Simon, all invoices that you raise for customers, so that's for sales revenue, Neelam, and to track all receipts, expenses. So said differently, your accountant's responsible for tax, your financial controller is responsible for all cash, and your bookkeeper is responsible for recording everything. Here's the rub. Even though the accountants are the top of the pay hierarchy, generally speaking, they cannot do their job effectively, Simon, unless the financial controller is doing their job effectively. And the financial controller can't do their job effectively unless the bookkeeper is doing things correctly. And often when I do a distressed acquisition, Alan, and I see a company's, when they're distressed, normally they're in total financial disarray. And when you track it back, often there's tax problems, but the accountant will wash their hands and say, well, it wasn't my fault. I did the stuff based upon what I was being told by the financial controller. And the financial controller will wash their hands and say, well, I was doing stuff based upon the invoices and the expenses that I was getting from the bookkeeper. Sometimes they blame the accountant as well for doing the tax returns wrong. So everybody blames everybody else, but it starts at the grassroots. Garbage in, garbage out. You can't get financial clarity unless your bookkeeper's dialed in, Tracy, to what's actually going on in the business. Okay, we're going to talk about hiring these roles and whether they should be in-house or external. And to give you a preview, it's less about whether these roles are internal or external. It's much more about, are they actually dialed in, Simon, to how your business operates? Just because they might understand tax or bookkeeping, right, or how to control finances, it doesn't help, Tracy, if they don't understand that, oh, you've got a special arrangement, Graham, with that client. Oh, Martin, you've offered special payment terms, or we want it recorded this way. Or Mike, this should be accrued, right? This mastermind invoice is a 12-month invoice, so don't put it all in this month. It should be spread. It should be accrued over the next 12 months. Okay, so these are different roles. And if you try and get it done by the same role, you either get an accountant doing control and bookkeeping stuff, which means that they're very, very, very expensive, John, and you end up overpaying. Or you end up with a bookkeeper who ends up trying to do tax returns and you miss out and you massively overpay on tax because you didn't understand that you could go have a R&D, a research and development tax claim, which could have massively reduced your corporation tax liability. Or you have an accountant or a bookkeeper, which normally are pretty shitty at collecting money in. They'll sit there, Neelam, all day behind a screen and input the data. But when it actually comes to inputting, to making the phone call, Aaron, Graham, Rachel, making the phone call, Chris, to the client and saying, hey, just wanted to touch in with you. I'm not sure if you're aware of this, but your invoice is 3 days past due. I'd really appreciate if you could get us up to speed this week. It's different skills. So it's done by different people. Okay. And I'm not saying you need to if this won't 3x your payroll. If you can be clear on the job, often they can do it in less time and you'll net end up paying less because the person that's doing the job is very efficient at doing it. So how do you find them? So if you're on board now with saying, yeah, you know what, I want total financial clarity. As a business owner, I don't want to be stuck in the nitty gritty. Okay. I don't want to have to be doing all this stuff myself. Okay. But I do need it doing. Okay. And now you understand the 3 roles and that they are different skill sets. How do you actually find them? Because normally, let's be honest, how do most small businesses hire? Right? The most small businesses recruitment strategy goes, they get desperate, John, desperate for a PA, right? They get desperate and then they put out a really shitty job ad. And then what happens? Because it's a shitty job ad, they get 3 responses. So they invite all 3 people, Tim, along to interview. 1 person doesn't show up. 1 shows up drunk, Tracy. So they end up hiring the 3rd person for the job. In other words, their strategy is hire the least shitty person from a really bad bunch, Simon. Right? And then they wonder why all of a sudden downstream they have embezzlement or they just have a really bad work culture because they haven't had deal flow. I.e., if you did nothing else, but instead of having 3 people apply for the job, you got 30. Or even better, Alan, you got 300. For those of you on this call that are in my mastermind program, we did a call that actually we released on the Business Growth Podcast, which is available on iTunes and all the places where podcasts are held, from Alexis Kingsbury, who one of my mastermind members that typically gets multiple thousand applicants for every role that he hires. And the reason why is everything else being equal, your chances. If you've got 30 applicants, Simon, Alison, if you've got 30 applicants rather than 3, your chance of making a good hire have just gone up tenfold. But most people won't bother to do that. But it's more than just getting deal flow. What is it about? It's about looking at their degrees or qualifications. It's about checking their references. Good God, Steve. If you hire somebody and you're not willing, Martin, I bet you've got some horror stories from your early days on this, of hiring somebody and you've not thoroughly checked their references. You're crazy. Anybody on this call, if I would say, hey guys, invest £30,000 into my private equity group, you'd be wise to ask questions, Mike, which would include, how am I going to get my return on investment? Okay, what does the ROI look like and what are the risks? And yet small business owners, Tim, make shocking mistakes frequently by not checking references. Okay, so references. What else? Role playing them. Okay, role playing them, i.e., actually running through in the session itself about, okay, I'm going to pretend now to be a client that owes money. I want you to ring up and get the money from me. Okay, I'll tell you a lot very quickly. Like if they panic and get flustered and their job is to ring up people and they fold as soon as you give them an objection that I haven't got money, they're probably not going to be that good as a financial controller. Or if you pay a supplier that's irate and wants payment now and they've got to withhold that, you know what? A role play will tell you a lot. Also, you can get them to teach you an interview. They actually, rather than Aaron, than seeing the interview process as arduous, actually use it to educate yourself. Because Chris, your complaint might be, well, I don't know what good looks like. Rachel, I don't know what good looks like in a accountant or bookkeeper. Well, you know what? You can ask them, hey, in the interview, you know, we're small and we're just getting, what does best practice look like in this area? Could you tell me what are the top 3 things, Chris, that you would do when you came through the door? What Aaron, Simon, what are the most common big mistakes that you see made in the other businesses that you've worked at? And what would you do here to make sure that those mistakes don't take root? And actually, the recruiting process can be an education. Some of the stuff I do in my business now, I got from people that I did not hire at interview 5 years ago. when I just got them to teach me what was the best practice that they saw in their organizations. Now, they weren't the right hire for a variety of reasons, but it doesn't mean I can't learn from them. So I'm upskilling myself. I'm becoming a better business owner through the interview process. Okay? How can you test them? We often overlook, oh, we're going to give them the job. Well, okay. Can we start them on a temporary basis? Can we hire them as a contractor? Can we put them to the test? Can we try them, Mike, on a small project first so you get to know what the working dynamic is? In fact, somebody on this call last year reached out to me, and he was moving country actually, and said, hey, you know, would you be looking to hire? And this person's an A player. And I said, absolutely. When you move into the UK, give me a call. I will find a role for you. I've always got a place, John, for A players. But the reason I can say that is we've worked together on a variety of different projects. And you know what? He always delivers, right? Now, I'd expect him to be highly paid, which means it's high risk. But can you test them out? Okay. And finally, scorecards. Scorecards. This, Martin, as you well know, is perhaps the most important element. Are you clear about what success looks like, Neelam, in each role? Are you really clear, Alan, what a good engineer versus a bad engineer looks like? Okay. Are we really clear, Alison, about what a good salesperson versus a bad salesperson, and exactly the same in these roles? What makes the difference between a good accountant and bad accountant, right? How long beyond the end of the month before you're willing to get the management accounts? Good financial controller, bad financial controller. Okay, what's an acceptable amount of aged payables? What's an acceptable amount of accounts receivable? Okay, what are your receivable days? And don't worry, in more modules on this course, we're going to get into more of these terms. So those terms just went over your head. Oh my God, Tracy, what's an aged receivable? Don't worry about it for now, okay? But you've got to get clear, okay? And we just spoke about these roles at a top level. You've got to get clear. How do you keep track of that? So you know that they're competent when it comes to tax returns or bookkeeping, right? Cash control. And how are you going to measure that so that you know and they know that they're doing a good job? But all those things that are around the center of that slide, deal flow, it comes out of deal flow. If you've got deal flow, if you did nothing else, you've just increased your chances of making a good hire tenfold by getting more leads. But once you've got more leads, more inquiries out that want the job, because let's be honest, an advantage of the current marketplace right now is there's an awful lot of people right now and in the near future that are going to be looking for jobs. All right, great. How do we then filter them to get the best hire? Guys, hiring the right people will grow your company faster than anything else. It's the ultimate leverage. We've all got limited time and money, but if we invest that money in great people, it'll grow exponentially. But the price we have to pay is not in their salary. It's in the diligence of getting the deal flow and the recruitment process, which I've outlined on the screen there. Qualifications, references, role play, teaching, testing, and scorecards. You start to piece together a recruitment process like that, and your chances of getting an A player have gone up not tenfold, but exponentially. And then all of a sudden, your company starts to grow in a much more relaxed way. So that's the key points, okay? The key points, that's how you find them. It fundamentally goes back to deal flow and the three roles: accountant, controller, bookkeeper, right? Accountant's about all things tax. Financial controller is about cash control, credit control. Bookkeeper is about recording things, invoices and receipts. You need to get them via deal flow. So the purpose of this segment is just to say you need these three roles on your financial team. And you've got to be clear about how you're keeping track of them, who's doing them, and you've either got the person there already and they perhaps need to be directed more effectively, or you don't. More than 50% of people that join my mastermind programs, Martin, this might interest you, end up changing at least one of these key roles in their business in the first 12 months, i.e. they fire an accountant. I was just before this, I was on a call with a private client who has just fired their accountant because they weren't up to scratch, and they've seen a higher standard. They've seen what higher standard looks like, so they are now going for another accountant. But how do you find a good accountant? Okay, qualifications, references, role play, teaching, testing, and scorecard. Okay, so before we go for questions, next week we're going to talk about cash is king. So turnover is vanity, profit is sanity. It's a great book, Alan. If you haven't got it on Amazon, you can get it, and a review. Same goes for all of you. I just happen to be looking at Alan. We're going to be talking about a simple 3-part system practiced by the very strongest companies in the world. Cash is king, but how do you actually protect cash? How do you build up the cash reserves? We're going to go through a very simple, a very effective system, and it's not what you think. Whatever you've got in mind is probably something a little bit different, because I've not covered this way before outside once in my Success Mastermind meetings. We're going to be talking about that on the module. It says next week, actually. It'll be this Friday. It'll be this Friday at 1 p.m. Okay, let me get out of that slide deck and we will go to your questions. Okay, so go back here. Excuse me, Zoom's not being very friendly. Okay, give me 1 second, guys. I'm having some problems with Zoom. There we go. Okay, I should be back now. I should be back video full screen. So over to you. Questions, thoughts, comments. I'm going to look in the, you can put them in the chat box. Some of you making me laugh. People, I made some of you paranoid about eating food. You can ask it in the chat box, or you can unmute yourself. I'll cover the ones in the chat box first. So, oh, Neelam asks about an auditor. Yeah, great. So what is an auditor? So an auditor is somebody that checks the quality of your books. So if you're a public limited company, the most extreme example, they're all mandatorily required to have auditors, which are effectively independent bodies that check that the accounts are being done correctly. So Neelam, the question, for most small businesses, that would not be necessary. And in fact, if you're doing the stuff practicing this course, you should be so dialed into it. I'm going to suggest it wouldn't be worth the money of you getting your books externally audited, because you'll catch it yourself. The only exception to that rule might be if you've got a multiple tiered shareholding structure, and therefore it's answerable to a lot of people. So as an example, I'm chairman of the local squash club, and it's a tennis and squash club, the oldest one in the UK. Shout out to Leamington Spa Tennis and Squash Club. And their accounts do get audited because it's in our mandate, because we're owned by the members. But for most small businesses, not necessary. And then Martin said, I tend to file all my clients' accountants, because Martin does some fantastic business coaching. Still looking for a good one. Want to buy one? Yes, Martin, I am. I actually just invested in and bought a stake in a bookkeeping company that I'm still looking to acquire an accountancy firm. So if anybody knows one for sale or part for sale, I'm all ears. So that's all the comments I've got in the chat. So let's go over to on the audio. So Simon, you're first up.
Okay, it's about finding a good accountant. We've had a couple of accountants, and in the past I've had various other accountants in other businesses. Not once yet have I actually found one I think is on the ball, proactive, not missing things. And very often I'm going to them and saying, well, what about doing it this way? What about doing this? And they're going, well, we could do that. And then, but they're not coming to me and saying, we could do that. The one I've got at the moment is good in the fact he's got good access for us. Comes to our quarterly meetings quarterly, and updates us on things. But it does seem very much that we're actually sort of promoting things to him and suggesting things to him, rather than necessarily be a, why don't you do this to save money, or why don't you do this as a different way of doing it.
Okay, so I hear you. So what's the question?
So the question is, of the things you said with regards to degrees and going around back into the the deal flow and so on. Each one seems to pass these that we've talked to. And again, I know a lot of it is just getting on with somebody and being able to call them up and having fairly good access to them. Which of those would you say is the most important if I was going to look to switch to somebody else now?
Great question. Great question. And I think it tracks in with the question that Rachel's asked that I'll come back to in a minute, Rachel. So two thoughts. Thought number one, as a starter for 10, a bit like in the sanity sessions, in the sanity checks that we're doing for businesses right now. And when you bought the book, I know, Simon, you've been on one, but for the others on this call, if you've not had a sanity session, which is a small group with me, kind of a strategic overview, applying the book to your business, just comment in the chat and we'll get in touch and get you slotted in for one of the upcoming sessions of that. But it's a metaphor, Simon. In there, we spoke about customers that come via word of mouth. They're infinitely better than customers that are generated by cold marketing. Same I find is true of accountants. So getting accountants that are referred, it would be my go-to. However, my second point, which is perhaps more relevant here, is I'll be non-specific because Simon's not giving me permission, but because this is a bigger business, a seven-figure business, and I know some people on here are seven figures, some are six figures, etc. The bigger you get, there's 2 points. One is it's more critical that you are really dialed in. So if it said another way, you can have a good accountant, but if their integration with your company, the dialogue with whoever's handling it at your side with them is not robust, it falls apart. Doesn't make him not a good accountant. It means that effectively you're not leading and directing the relationship well. So they're doing a good job for other people, but if you keep hiring shit accountants, you've got to look at yourself and go, it's something that we're doing. Are we just abdicating and dumping it on them? But as a thing that you might consider relative to that, Simon, is because by the way, if you ever talk to accountants, they just all complain about the clients now. They never give them the data and they're doing the best they can with no information, right? So I'm not saying that's where you are, but if it's coming up again and again, I'd suggest that you look closely there. And as you get bigger, as you are, more and more of it typically is better off in-house. Unless it gets really specialist tax stuff. And the reason why is if you're with an accountant, they've got several hundred other clients, they just don't have the brain space. They all say that they're proactive, and they would be if they were just on your business, but they've got 199 other clients to deal with simultaneously. Right? So for example, full disclosure, I choose, here's an interesting point, I choose to have a different accountant for each of my different businesses. And the reason why is several years ago, I had one accountant for all my businesses who was very good, I thought. And he ended up, HMRC thought he was a little bit too aggressive on the tax mitigation, shall we say, and went after every single one of his clients. The problem was I was his client 6 times. So I had 6 tax investigations simultaneously. And after I got through all that and got it all resolved, thankfully, and only one of the companies hadn't paid enough tax and we sorted that out, paid that. But once I sorted all that out, I went, never the fuck again. I'm going to have deal flow and accountants, right? Better deal flow. That's where this came from. So I have different ones on different businesses. And, but in one of my businesses recently, all of a sudden, somebody came to me. It was in a mastermind, actually. And somebody in a mastermind went, Dan, and it was for my training business. And somebody went, oh, you've got a great R&D claim there. And I went, no, it's not going to qualify for R&D. I'm pretty clued up, not going to qualify. And they went, I disagree. Speak to this accountant. So I spoke to this accountant, had a chat and realized that I could qualify. So I went back to my accountant for the training business. And lo and behold, I qualified for a significant, very significant R&D claim that could go back a few years. And I went, holy crap, why would you not bring this to me? But the fact is, Simon, they don't. And I can sit here and I can bitch and I can moan about it all day long. Nobody cares as much, Simon, about your money as you do. So this is the value of being in mixing with smart, switched on business owners. Because I didn't actually have to do the R&D tax claim, right? I just got the idea and then went and delegated it out to my team. And my accountant could do it. And by the way, they do a great job. But had they missed that? Yes. And did that leave me paying an extremely large amount of corporation tax needlessly? Yeah, it did. All right. I'm not actually going to fire him. It's like you're never completely off the hook. Completely off the hook. So I would look to really think about how you're communicating in the frequency with the accountants. They want to do everything on email. I hate it. I make sure there's a face-to-face meeting at least monthly with the accountants, which are the only externals that I use, books, everything. I prefer to do in-house because you've got to build that relationship and pick it up, and I want their undivided attention. I don't want one-liner emails that get sent and then I miss it or they miss it and it doesn't get picked up for a month. You need momentum. So I waxed a bit lyrical there, Simon, but does that give you something to go with?
It certainly does.
Good
Thanks,
man.
Dan.
All right, thanks, Simon. All right, I'll just mute you. All right, I've got some more questions in the chat, and then you can unmute yourself and ask questions as well if you'd like. Where was I up to? Rachel, what are the 3 key markers to track for each of the roles to ensure clarity, RE, performance, and expectations? Okay. I'll do my best to answer this, Rachel, but it's a little bit tricky because it depends on the business. Okay. So with the, so let's do the 3 roles briefly. With the accountants, the answer is when you're consistently getting the management accounts we spoke about in module 1, right? So you're getting a balance sheet, P&L, and a statement of cash flow monthly. And for me, it's by the 7th of the month from the previous month. Okay, to be simplistic. So as long as by the 7th of the month, or some people might say the 10th of the month. So by the 10th of May, I've got the accounts for April. Okay, that's the kind of pace and momentum. And then whether or not they're doing a good job, it's literally, as we're going to talk about, I think it's in module 4, we are talking about the analysis of the accounts. It shows up whether or not those accounts are accurate. If they are doing those accounts accurately, I'm good, right? Those 3 scorecards. That's a simplification of the accountant role. The financial controller role. Okay. So you've got cash in, cash out. So there's probably going to be a target on overall cash position. And then there's probably going to be a target on receivable days and payable days. Let's explain briefly what they are. Receivable days, I mean, you can look it up online, but for brief, it's how much money you're owed as a proportion of your turnover. Okay. So it's saying how good are you at collecting money that you're owed? Or it could be measured as how old is the debt that's outstanding. So that's, so cash is 1, receivables is a 2nd metric, and payables or trade creditors is another metric, i.e. how much do you have and what's an acceptable amount of time to pay that in. There are 3 metrics or areas in which you can lay metrics for measuring the financial controller. Okay. And actually, I'm going to elaborate much more on that in the module this Friday, Rachel. I've actually got much more intricacies of, I've got a system for they put these percentages in these accounts, etc., and how it tracks to the budget. But that's too elaborate for now. We'll talk about that in a future module. And who have I not done? Oh, bookkeeper. Yeah. So bookkeeper, I'm looking at effectively how up to date they are with 3 things. That all the invoices or sales invoices are raised and on the system within 7 days, right? So it can't be more than a week past due, right? So at the end of the week, they do that week's worth of invoices. Same thing with the expenses, right? So how up to date they are with that input. And the 3rd one is bank reconciliation, right? So have they reconciled the bank in the accounting software? And I prefer 0. There's more to it than that, but for brief, that's an answer now. Annoyingly, I don't. I've dropped the ball. I don't have a link to post in the comments to book on the sanity session, Chris. But if anybody posts that they're interested, we will get that sorted to you. I can't remember the link URL off the top of my head. Okay, next up, Simon. Should you go to account for tax planning advice and structuring or group structure? Should you plan in advance if you plan to hold multiple businesses or as you grow the structure? Great question, Simon. And without sounding too self-indulgent, you can ask your accountant. You could also ask a lawyer. But I'm much more in favor of asking a smart business mentor, right? Because the problem with the lawyers, generally speaking, is they only think about things from a legal perspective. And the problem with accountants, generally speaking, is they only think about things from a tax perspective. Very rare is it that they've got commercial experience, because often these things are diametrically opposed, right? If you're looking to sell your business, for example, it's mutually opposed that you can either try and have your business pay the smallest amount of corporation tax, but then it shows smaller profits. So you're paying less tax. And if you can be efficient with how you get the money out, that's good for you, the owner. But it's bad if you're trying to sell the business when you want to show the highest amount of profits, but then you're going to get the biggest tax bill. So you've always got to be thinking at a strategic level. And therefore, Simon, I think it's critical you get strategic oversight from a smart chairman, non-exec director, or boardroom type mastermind environment. And I don't think you should just have one. I do think you should have multiple, right? That's the purpose of having a board. So in my business, in this training business, we have private mastermind. They're in groups of 8. Okay. So effectively I act as chairman, and you've got other smart business owners of a similar or larger size than yours, where you get different perspectives about ways to do it, right? I think it was Einstein that said, genius is the ability to hold 2 opposing thoughts simultaneously. Okay. Martin says, as Dan said, the foundation is bookkeeping. So an idea to think about is getting your bookkeeper to come and sit with you for a few hours per week, per month, and can learn from them and then from you what you want. It's great use of time in the early days. That's a great point, Martin. So let me say that again. Martin's saying great use of time is to have your bookkeeper come and sit with you for a few hours, and you sit with them for a few hours. So effectively you're learning how they work, and they're learning how the business operates, right? So they're going to make better decisions, and you are too, in what terms of what's needed to be communicated. Great point, Martin. Neelam, yeah, great. Neelam says some of the big accountancy firms hire ex-HMRC folk where they were performing well. Yeah, great. I mean, there's a lot of accountants or tax advisors that are ex-HMRC that can make sure that you structure it optimally, and that can be worthwhile, right? That can be worthwhile, having, again, accountants, tax speciality, even external consultants, depending on the complexity of your business. There you go. My assistant's posted in the chat. If you want to book on a sanity session, email me, julie@danbradbury.com, and she'll get someone to call you. So email julie@danbradbury.com. The sanity sessions, by the way, for everybody on this call, is to apply the book to your business. So to apply these 9.5 steps to your business, we'll walk you through it in a small group. Typically, it's 5 or 6 others on a call. And we'll walk through that. And that was an additional bonus because we were late getting this finance course out. Okay. So we've still got most of you on the call. So there's still a load of us on the call. So if you've got any more questions, because I've run out of them on the chat now, feel free to unmute yourself and speak now. Alan, Simon, Steve, Aaron, or forever hold your peace.
Hello, Dan.
Hey, Alan.
Hello. Yeah, we've got a separate accountant, a financial controller, and a bookkeeper.
Okay.
But they all do different tasks than what you've listed.
Okay.
So the accountant does tax returns and payroll. No, she does just tax returns.
Okay.
The bookkeeper does payroll, VAT, and pensions.
Okay.
And the financial controller does everything else: invoices in, invoicing out, chasing.
Okay.
How would we split that up? They seem to be pretty successful in the way they run it, to be perfectly honest. How would we change that?
Well, my first question, which you just kind of alluded to, is how is it working for you, right? As in, even though I broke it out that way, I'm not rigid. In fact, I'm not in favor of forcing it to be a certain way if by the way it falls, it happens. So for example, a lot of bookkeepers are in training to become accountants. So effectively, it's a different level of expertise to do a lot of the return stuff, okay? So it's not uncommon for a bookkeeper to be able to run payroll, okay? But you don't want to make the mistake of having a bookkeeper that can't doing it, putting payroll on them, and then them screwing it up, and then HMRC comes back on you, okay? So the first question is about, well, how well it's working. And if it's working great and you're getting the data that you want as we progress working together, if you go, you know what, I'm getting the information that I want, you might not need to change anything, right? And again, you guys have got a multi-7-figure business, and a obviously I know the numbers in that business and they're great. So I'd say it's indicative that it probably is being done really well. But the counterbalancing thought to that is, okay, is to try on in your head, is there a way for it to be done better? Right? Are there any bugbears, or is it a bit slow? Are certain things a bit slow? And then that'll cause you to reflect. Can it be done better? Because either you can move the jobs between the people, but it might be that the only reason this person's picking up all the jobs is because this person can't. Either they don't have the time to, or they're not competent enough to. And that might be a clue. Well, actually, that person needs to go and be replaced by somebody else.
The thing is, the bookkeeper and the accountant are external. They're not employed by us.
Okay. Do they work for the same company?
No.
No.
Okay. That's good, by the way, because even though there's sometimes miscommunication, often when it's in the same company, they cover each other's backs. And I don't mean that in a healthy way, if one of them screws up, right?
Yeah.
So it's useful for a bookkeeper to be saying, oh, that accountant's missed that. And the accountant to say that bookkeeper has missed that. Okay. So I'm okay with it being external. So are there any problems or limiting factors as you guys see it?
I think the only thing that you brought out is about the where you can claim money from your tax about, what was the thing?
Research and development.
Research and development.
Okay.
We have looked into that with a different company and they never come back to us, but our accountant has never brought that up.
No.
She's never ever brought that up.
Yeah, so here's something that's very useful, an additional thought on that for everybody to say. And so for this might be relevant for the slide deck and the update, is I mentioned this on the last module, but I like to mentally fire every single person that works for me, employee or contractor, every quarter. I.e., I like to think about, Tracy, if I had to let them go because they did some gross misconduct, right? They stole from me, whatever. They've got a raging cocaine habit, whatever that might be where you go, it's non-negotiable, they've got to go. Then it causes me to think about how might I do it. As a sense check, I semi-frequently, like the R&D example I gave you, I said, you know what, my accountant's great and I know what I'm doing. But somebody else challenged me from a mastermind that I participate in. I'm in several. Somebody challenged me and said, no, Dan, you're missing, your assumption is wrong here. Go and check it out with my guys. I went to his accountants and had a conversation that persuaded me that it was worth exploring further. And I then took it back to my accountants and they went, oh, actually, yeah, you're right. And they kind of held their hands up and said, yeah, actually, we missed this. Okay, yeah, let's get into it and fixed it. And they do enough good stuff that I'll give them the pass on the fact that they missed the opportunity. But the point is, I'm still picking up external references and ideas. If my accountant had said, you can't claim that, and this accountant said, you can, then it would have been interesting. Because I might have gone, well, I'll go and get this accountant to do that specialist bit of work. I might have done that. Or I might have just looked at it further and gone, okay, just because an accountant says you can claim something back tax-wise doesn't mean necessarily that you can. That's what got me unstuck and in hot water a few years ago. So I would have probably just dug a bit deeper, maybe gone and got a third opinion. By the way, is any of this sexy, guys? John, is it exciting? No, but it makes a lot of fucking money, right? And that for me was, it wasn't worth six figures, but it was worth, it was heading in that direction. So it was like, you know what, that it was worthy of doing that initial inquiries, even though I'm not the one actually filling in the return. So Tracy, I'm not saying that you need to do that, but it's probably is worthwhile you dabbling, pretending for another accountant that you're not happy, that you could be saving more. Let's have an initial meeting. Can you look at my accounts and tell us how you would do this differently or better? Right?
Yeah.
That's like the interview process. You're gathering information. You're letting them teach you how your accounts could be done better and quicker. And then you decide whether or not you want to switch. So the only other thing that you guys said, and then I'll move to next questions, was I think you said your financial controller is doing your invoicing. Is that?
Yeah.
Yeah. Yeah. So I can live with that. Again, I'm making it out like these three roles are rigid. And the truth is they're not. They are different skill sets. So typically the skills to do with the nitty gritty of getting the numbers right is not the same skill set and isn't typically compatible with somebody that's actually good at getting the money in, right? And collecting in the money. If this person's doing a great job at that, I'm good. I don't need you to wrestle it off them and put it on someone else. I'm saying, okay, are these jobs being done consistently? And if they are, okay. But that doesn't mean, Tracy, that you don't go off and do check and balances and occasionally ask other people's opinions. And I'll do a lot of mystery shopping on my own people and, you know, and ask people differences of opinion. Not because I'm trying to sneak up on anybody. I'm avoiding hurting anybody's feelings. I'm just educating myself to different perspectives so I can make a better choice.
Thank you.
Yeah.
Yeah. So thanks, guys. I'm aware that that wasn't probably the most concrete, simplistic answer that I've got for you, but I think it's the appropriate one. Okay, Rachel, you've got your hand in the air, so take us away.
Oh, I didn't realize I had. I just wanted to say thank you for the answer to the other, because it just gives me benchmarks to move towards with those different aspects of the finance roles, and that clarity piece has been really, really helpful. So thank you.
Good. You're more than welcome. More than welcome. Thank you. All right. Anybody else, guys? We still got a few minutes left. If anybody's got questions, so we got Aaron, Alex, Alison, Andy. Oh, hello, Arthur. Graham. Oh, Graham says he knows good R&D tax specialist. If anyone wants an introduction. Harry, Jim, John, Josh. Cool. More people are joining. Luke, who's not spoken. The other Simon, Steve, Tom, and Vanessa. All right. So another comment here from Martin. For a large business, it's important to make your financial team take a few weeks off, as most fraud cannot be covered up for that period. In my business, we insisted on this and it uncovered a few issues. Yeah, great. Now, as context, Martin's run, I believe, 8-figure businesses in the past, so he knows what he's talking about. And I would agree. We'll talk about it more in a different module, but yeah, it's most theft comes from the inside. You know, like even in retail, most theft doesn't come from customers, it comes from employee theft. So, you know, fraud, and there's been a whole raft of these recently. The one I remember from last year was Patisserie Valerie, where the FD or different financial person in the business is the one stealing the money. Yeah, so it is good. Neelam's probably speaking now saying, yeah, that's why I have an auditor. Yeah, that might be one of the reasons why I have an auditor, but perhaps a more cost-efficient way is just to effectively swap people out, make people take time off, etc. Dive in deeply yourself. You know, so occasionally I'll be uberly anal on a VAT return, for example, or uberly anal on reconciling the bank accounts and sit with the bookkeeper to do it. It's not because I don't trust them. It's just say, you know what? Life happens. I like to stay dialed in, John. Nobody cares more about your money than you do. Okay. Yeah, so Graham, Alan's asking for the details of the R&D specialist, so please post it. Oh, I can see you've already done that. I wasn't reading ahead. Very good. All right, final questions, guys. Last chances. Vanessa and Rachel, Neelam, Mike. Okay, then I think we're good. So well done, guys. As a reminder, this Friday, we'll put it up on that danbradbury.com/finance. It will ask you for email authentication at some point. You just need to use the whatever email you registered with us when you bought the book to put it in to get access to module 1. This module will probably go up within 24 hours. And then this Friday, module 3, cash is king. Turnover is vanity, profit is sanity, but cash is definitely king. So we'll be talking about that this Friday. Hope you enjoyed this call, guys. See you soon.